Hi, I'm Bayrak from Bloomberg Tax and Accounting, here to discuss 3 things to know about the business interest deduction limitation under Section 163J. First, what is the business interest expense limitation? Since the passage of the Tax Cuts and Jobs Act, 163J outlines that the amount of deductible business interest expense in the tax year cannot exceed the sum of the taxpayer's business interest income for the year, 30% of the taxpayer's adjusted taxable income or ATI for the year, the taxpayer's floor plan financing interest expense for the year. Next, what is the definition of interest for purposes of the 163J limitation on deductibility of business interest expenses? Here, interest includes amounts paid or accrued as compensation for the use or forbearance of money, but also includes amounts associated with arrangements that create indebtedness in substance but not in form. This definition is broader than the definition of interest for other federal income tax purposes and includes items such as substitute interest payments in certain situations involving a sale repurchase agreement or a securities lending transaction, acquisition discounts, deductible repurchase premiums, amounts treated as interest under other provisions of the tax law, and, subject to an exception, a portion of the payments on over-the-counter interest rate swaps. Finally, how does the CARES Act impact 163J? The CARES Act temporarily increased the ATI portion of the limitation from 30% to 50% of ATI for tax years 2019 and 2020, with the ability to elect out of the increased limitation, and allow taxpayers to elect to substitute 2019 ATI for 2020 ATI. Even with this additional relief, the limitation is likely to impact more businesses than originally envisioned when the provision was first enacted.